about. So let me introduce our panelists. We have Trang Dow. She is the Vice President of Growth at Atom Finance. Also Brad Simmons, the Chief Marketing Officer at Figure, and Joe Ziemer, who is the Vice President of Communications and Policy at Betterment. So, hey guys, welcome. Whoops, we're missing one person here. Where's Brad? Well, let's get going. Maybe he's having a little technical difficulties, which is definitely can easily happen. So we'll just get started, and then he can jump in when he is. Oh, there he is. All right, Brad, welcome.
Thanks.
Okay, we did not save the what is it, the best for last? Well, okay, we did save them. I'll give you the compliment. Anyway, so just so let's get started. And I want to jump right into it, but as you're talking, you can sort of let people know a little bit more about what you're doing, but just, we are limited. So that's why let's just get right to the nitty gritty. And really, as I introduce you guys, you know, how are you reaching your customers? What channels are you using? And how are you differentiating yourself in all of this clutter? And Joe, let's start with you.
Thank you for having me today. As mentioned, Joe Ziemer, run communications and policy at Betterment. We're an online financial services company that offers investing and banking services. Our key differentiator at Betterment, and I think a pretty crowded marketplace of not only new entrants, but also incumbents, really is customer alignment and delivering advice to customers. The majority of companies in our space tend to not often act or promote their customers' best interest in the actions. It's effectively letting, we like the analogy of letting a patient pick their own medicine at the pharmacy as opposed to actually getting a prescription from a doctor. We use a variety of different channels to communicate regularly with our customers, all the usuals, social channels, email, content, and quite a bit of media. I think one of the most interesting things for us is that we tend to be on the more spectrum of, I would say, FinTech's a very broad category. Our key business is more on the serious side, retirement savings being the largest piece of it. And for us, that often means also there's no single point of attribution for the channels that attract new customers to us. The typical customer sees about us maybe in an article, visits our site, gets retargeted, signs up, we drop a CRM flow to them, and then they actually fund the account. So it's a pretty long multi-step process. So there's really no key single point of attribution.
Okay, well, and Trang, why don't you tell us a little bit about how you guys are getting your name out there and showing them who you are?
Yeah, sure. Thanks for having me here today. Happy to be here. So we are a consumer software platform. We provide institutional quality investment resources to individual investors. We launched just last year as a solution for the growing population of investors entering the public markets. You want to think of us as addressing the massive information gap between enterprise solutions such as Cap IQ and the Bloomberg terminal, which can cost $20,000 a year, versus what's available to retail today, which is basically Yahoo and Google Finance. And so when you create an Atom account, you can follow stocks or link your brokerage accounts. We build a fully customized experience for you based on your portfolio that includes breaking news alerts, 3 times a day market briefings, benchmarking, consensus, SEC filings, document search, basically everything you possibly could ever need to make the best investment decision with the best intelligence and information. So for us, the challenge is, you know, in the investing space, just as Joe just mentioned, it's quite crowded. But on top of that, like commission-free and no stock fee stock trading has become the norm. Like most investors expect to have really easy access to the market, and the focus is really about, you know, where you can make the cheapest, most convenient trades. For us, the challenge is making sure that people understand what our mission and our value prop is, which is that it's not just about being able to access the market, so being able to access the right quality data and information. So that they can have the right information and make wise investing decisions. So because we're still a pretty young startup when we launched last year, our strategy and our approach is really just to be digitally focused and everywhere, right? So on our product, we made sure to have both an app and desktop available. And then in terms of our media strategy, we made sure that our organic and paid media mix for like the first 6 to 8 months leaned heavily on the channels that would allow us to tell our story, explain our purpose, and engage in like a one-to-one manner with our customers. Because again, it's quite difficult for us to, change the way people are thinking about like where can I trade for free, like really, really quickly and conveniently. And for us, it's just like, well, where can you also get the right information really quickly and conveniently to couple with the trades that you're making. So initially we launched organic and paid campaigns on Reddit, which did really well, Facebook, Instagram, Twitter, Quora, and then we also relied on affiliates, influencers. We had our founder on a few podcast interviews, again, just to give us the ability to be able to produce the long form content necessary in order to like promote our mission.
Okay, and Brad, also for you in terms of just really, I mean, as Trang was talking about, a lot of different channels, kind of just blasting it out there, but are you somehow doing anything that really focuses on a particular audience that that can help distinguish you guys?
Yeah. For us, we're very targeted in our approach. I look at it. There's two flavors. There's creating demand and capturing demand. So we're active kind of on both, and because we're consumer lending and specifically targeted at homeowners, we use data, both credit data and home equity data, and marry those two together and come up with a subset of consumers to target. And then we reinforce, so direct mail is a big channel for us. And so we do offline, we get that in front of a user, and then we onboard that data digitally, and we retarget those folks through whether it's connected TV, social, display, native advertising. So we try to get our message in front of them multiple times, in addition to continuing to mail them. And that's kind of the creating demand side. And then capturing demand, we just make sure that we're positioned, whether it's with partners, or affiliates that folks that are out there searching for our products, that we are front and center, whether that's paid search or across content sites like money.com or Bankrate or Lending Tree.
Well, and throwing it back to you, Brad, still in terms of you are so targeted, but then we have this thing called the pandemic that hits, and you can't go to people person to person anymore. And also, is this changing your audience at all? Are you forced to pivot at this point to do something else in terms of your messaging and also in terms of how you're reaching people?
Yeah, I think definitely on the messaging side, I think, with COVID, I mean, where we're differentiated is really, our product from a HELOC perspective or home equity line is that it's a 5-day process, right? From app to fund, and the entire application is digital, which is not typical of, traditional banks and that process. So we've been able to capture, a lot of mind share, because a lot of lenders also stopped lending from a HELOC perspective, the bigger banks. So we've been able to get in front of people given our process, and it's very high touch, right? Through the process. You don't need an appraisal. There's not somebody coming out to your house to do an appraisal. Our notary sessions are all virtual, right? They're all done on video. So we can walk a prospective customer right through the flow, from a distance, right? And digitally. So, we've done well kind of in the pandemic by being open, right, for business, but also having a product that's, that kind of fits the current times.
Right. And now with you, Joe, obviously you can't meet face to face. That's something that's a given during COVID, but what else have you been doing to really reach that particular customer?
Yes, I think we were pretty well positioned going into it, but I think one thing that we also discovered, not only due to the volatility, but just the fact that people were at home, we did have more customers kind of contacting us with general questions. So we tried to identify channels where we could reach and answer many of those questions, because many were the same. So we really looked to ramp up our content, emails, different customers. We held various chats on Twitter and Reddit, and really any other channel that we could find that would be of interest to customers. And we did also kind of ramp up our CRM around just overall market themes. One thing we've always preached is that volatility is inevitable, and it's hard to stay in the markets emotionally, but it's the right thing to do. And we've preached that for customers since day one that they joined, and we saw 26% more customers do ad hoc deposits than withdrawals. And we also saw a 25% increase in investment accounts Q1 this year over Q1 last year during peak volatility, which was quite encouraging.
Well, now seeing that kind of increase, and obviously it's based on what's going on now, but is there any way to sort of pick up from that and be able to move forward to sort of keep that kind of business going?
Yeah, it's something we do. I mean, we focus really on the long haul. A lot of these new accounts were taxable accounts. So certainly once a customer comes to us, opens one account, there's an opportunity for us to deepen the relationship and open additional accounts, not only on the investing side, but on the banking side. So once we get a customer in the door, we think that there's a lot of opportunity to grow with them.
Yeah, and for Trang, I'm sure with all this market volatility, I mean, you guys are giving that knowledge. That's what your customers are going to you for. So there must have been a lot of engagement there.
Yeah, correct. So I think just echoing really what Joe and Brad covered here. I mean, a lot of events aligned during the pandemic that worked well for us, but then a lot of things happened as well that made us make sure that we were taking a step back and thinking about our customers and how to support them and how we should behave, because we know that customer loyalty in the future is shaped by how a brand behaves during a crisis. So in terms of our acquisition mix, like I mentioned, we were fully digital. By March, we had expanded. We were running on, a dozen different channels. We also have multi-touch in place. So like all that were happening because of, more people being online, advertisers pulling back their budgets, like all of the CPM and CPC shifts, like we really weren't too affected by that because we were able to very nimbly and quickly allocate money between channels, like really easily. In terms of what we did with our current customers and, figuring out what our messaging should be and how to deal with customer engagement, we actually made a few updates on the product side. So we released a few features early. We fast-tracked development of release of our chat beta because we knew that people would be more anxious and they'd really want to be able to talk and engage with other users on the platform. We also expanded coverage and access to a premium news content feature that we were testing as well. And, all of that performed really well. And then we made sure to stay in front of everyone who was reaching out to us directly, through DMs, we're all digital, and so we get tons and tons of messages, and those just continue to increase as the pandemic continued to grow more uncertain. And so we just made sure to stay in front of those folks and reassure them that we were a source of reliable, trustworthy, accurate data to help them guide them through the volatility.
Yeah, and with all that, the testing and the learning, is that something that you can play off of now and continue moving forward with? What did you really learn from that maybe as you move forward and as we get out of all of this, you can continue to do?
Yeah, so I mean, our growth team here is pretty, I think probably everyone on this panel, we are pretty performance marketing based, and so there already was a framework in place to always test and measure, right? And so we know exactly coming out of we're not really out of it right now, but I'd say since February, we've seen conversion rates increase 25%. Our CPAs have dropped by more than half. Our active user base has tripled. So we're constantly keeping track of everything. And I think we had the testing mind frame in place already. We'll continue with that. And I think moving forward, it's just really more about making sure that we're as adaptable and keeping our finger on the pulse of everything that's changing really quickly and making sure that we're responding quickly to our customers.
And Brad, talk about a little bit more about how you stayed connected with your customers during this time. I know you mentioned FaceTime and other ways that you really still could have that personal, because a lot of it is when it comes down to it, you need to differentiate yourself, but you need to have, which we talked about yesterday, that personal relationship with your customers in order to keep them going and staying with you. Talk about that and how you were able to develop that even at a time when really no one can connect.
Yeah, we're very heavily focused and high touch with our customers, like I mentioned before. So we, our operations team is, one of the best in the business, at least in my experience over the years. And I mean, you can see that by our Trustpilot reviews. I mean, we really take to heart, what we're doing for homeowners, right? Giving them, basically unparalleled access to the equity in their home to make better financial decisions. I mean, it's, you're going to pay less borrowing from yourself per se than going with credit cards or personal loans. So we know a lot of folks come to us for either debt consolidation or they want to do some type of home improvement. So that's a very, and we're talking about their home, right? So it's a very it's the largest purchase they'll make. So we're very conscious of that, and we make sure that we're high touch all the way through the process, whether that's digitally via CRM and lifecycle marketing, but also via outreach through our call center. So we do a good number of outbound versus just waiting and for folks to reach out to us. We will reach out to folks that maybe stop in our process to answer any questions and kind of walk them through the process. So we kind of pride ourselves on kind of like white glove service.
Well, let me ask this, because sort of getting to the crux of what this panel is about, it's really distinguishing yourselves and kind of getting outside of all the noise. What channel, is there one channel or is there one message that you find is working best for you, not only during this time, during the pandemic, but that was working for you beforehand and that you'll continue to do, or that maybe you've come to realize that you'll continue to do? And Joe, we can start with you for that one. Just what is it that really helps you stand out above the crowd?
I think overall the advice piece has been very central for us, especially on the investing side of the product. Taking into account the things that you should be doing, not just the things that you want to do, and we want to give you all the information in real time to improve your outcome. An example of that is that if you're going to make a change in a Betterment portfolio, typically you go to an online brokerage, you just hit sell, I want to do this, it happens. For us, there'll be a little step in the middle where we'll actually tell you the tax impact in real time. So if you make this transaction, whether it's an allocation change or a withdrawal, you're likely going to owe this much in taxes. And that's a pretty powerful tool to give to somebody. That's just an example of advice that's very, very beneficial to people. And I think that tends to be shining through for us kind of in this current environment.
Okay, and for Trang, for you? For Trang?
So in terms of a particular channel or message, again, we are everywhere, but I will say what's been unique for me here versus other places that I've been. So we don't have a referral program in place yet, but a lot of our growth, like in the first 6 months, was purely through word of mouth, and I do think that is because because what we're offering is again not really something that the current individual retail investor that is using the Robinhoods, the Stashes, the Acorns, and whatever thinks about. Once they start using our product and find that it complements what they're currently doing for their own individual trading, they actually advocate quite strongly for it. So we have again, just because we're live on all these social channels, a lot of people tweet about us, post about us on Reddit, have asked questions about us on Quora and that kind of thing, and that in itself has sort of built this pseudo an official referral engine. So I think it's not really a channel, it's just really more once our product actually gets in the hands of our users, and because we have the presence on social, the flywheel, or however you want to call it, really spins up.
Okay, and I think Steve, can we let Brad answer, or you came popped up there? Are we running long?
Oh, Steve's muted still.
Oh, Steve, you're muted.
No,
Brad,
keep going, Lisa. I'm sorry. That was my own glitch. We had to log back in because my connection was done.
Oh, okay. I'm like, am I getting bumped? But actually, I do want to remind everyone before letting you answer, Brad, that we will be opening up to questions for these guys. So let us know in chat, Steve will, or in chat, or let us know by raising your hand and Steve will call on you and unmute you. So, but Brad, and sort of following up with what Trang was saying, in terms of how much do you rely on your customer base, to sort of then build your brand more and really distinguish yourselves?
Yeah, one of the things we do on a regular basis is cultivate customer stories, right? And we even had a campaign, it was late last year, where it was an actual customer. The testimonial was the 30-second spot that we shot and ran on network television. And I think that spot basically encompasses what we do for people. And it was unscripted. We literally just sat in the living room. This gentleman's an EMT from Bakersfield. And I won't go through the whole story, but had some financial setbacks, both the family and then personally with himself, and ended up, in debt, landslide, right? And didn't know what he was going to do. So basically came to us, and we helped him essentially refinance that debt so he can pay it off faster. And it was a super compelling story. And again, like, we pride ourselves on Trustpilot reviews, reaching out to our customers and getting feedback. We even have in the dashboard for our customers, there's a CEO feedback email, and that email goes direct to Mike Cagney. Any customer can fill it out with feedback, both positive and negative, and we address every single one of those personally back to the user, whether they got a product from us or not. So again, it's like one of these, especially in a time like this, it's that personal connection makes all the difference.
And really, I mean, obviously financial services, you guys are about that, but any D2C, that really is the backbone of all of their businesses, is just really connecting with the customers. And that's really your edge, I would think, in terms of dealing with any, not only the smaller businesses, but any of the legacy brands that you have to come up against.
Yeah, it's definitely a differentiator as it relates to traditional banking, for sure.
Yeah. So Steve, I think I can bring you in now. If we have any questions for these guys? If Steve is there, yes. And he's still muted.
Sorry, everybody. And pardon me if we have glitches, because for some reason my internet connection has gotten really dodgy.
Dark, but that's okay. We can still see you.
The big question almost all the marketers I talk with have now is about media planning moving forward. And it's all, the media environment is uncertain. The social and cultural environment is uncertain. The pandemic environment is uncertain. How are you guys managing in terms of forecasting? Are you contingency planning? Do you have particular scenarios that you're playing out in order to know how you're budgeting forward through the end of this year and into next year?
Yeah, I can start with that. So we've had to shift, from a media perspective. We, pre-COVID, we had a stronger offline presence as far as brand building and getting our message out there for creating demand and awareness for our product. An example of that is television, right? Television and radio, where you could do radio because people are in their car commuting. People still listen to the radio. And then sports and news, right, on television. So an example of that is we just saw some recent numbers on NBA, NFL, and NHL, and the viewership. Even though people were starving for sports, they're seeing 30 to 40% declines in viewership, right, over pre-COVID, and even year over year. So we've moved away from those channels temporarily, and like I mentioned before, we're really getting super targeted. We're using the data we have from pre-screen and qualified offers to hit that base across multiple channels, and mostly digitally. And so we've moved from kind of broader television to like connected TV, where we can specifically target individuals that have seen our message already.
Joe or Trang, do you want to have a?
Yeah, I'd say, very similar to Brad's comments. I mean, we did have offline and out of home plans that we, again, because we're a startup, we have limited resources, like we haven't really been able to finalize or move forward with that. And I don't really feel comfortable pursuing that right now. And so to your question about contingency plan, Steve, yeah, I have probably like 5 different budgeting scenarios I've run through with my boss for just like, this is what we need to see happen. Like, I'm comfortable spending this much, I wanted to start like some, all of our marketing so far has been direct response. I really wanted, like, really eager to go into like brand and awareness buys, but it looks like we might need to rely on doing that more through digital means. But they just all questions we're thinking about, but just, we just don't really know what's going to happen. We just, again, like, try to stay adaptable and just make sure that we're, I read a lot of MediaPost, just to like keep up with like what else is happening. So it's just really more about like staying up to date and just making sure that you have a plan for like anything that could possibly happen.
Joe, you're muted.
Joe, unmute.
Joe, you're muted.
There we go.
There you go.
Very similar. pull the little bit that we spend offline, heavy DR, even more so than usual, and a larger shift even towards paid social, Snap, Instagram, things like that, where we saw an increase even in engagement on what we saw beforehand.
Well, two things come out of some of your answers. One is you're all emphasizing performance and DR, it seems. Is this simply not a time for brand building? Is the environment not right for it, either the media environment or the cultural environment, right for brand building right now?
I tend to think, I would guess that likely all three of us will say for our company's budgets, and correct me if I'm wrong, that we all are predominantly DR and customer acquisition focused rather than brand awareness building. We tend to utilize other channels and efforts for that as opposed to media dollars.
Mm-hmm.
Yeah, I think it's also, I mean, that's absolutely the case, what Joe said, but also it's brand building right now for us is a very complex question to answer, right? Just because like you mentioned, Steve, the cultural environment, the political environment, everything. Like we're still such a baby company. Like we are, we were still trying to actually like figure out like exactly what our brand and mission, like how to communicate that, like just in a siloed like normal environment. So add all of these layers onto it, and so it just becomes a much more complicated and nuanced question to try and answer.
Yeah, and for us, I've always had the, looked at brand as, I call it's not, I didn't coin this term, it's not my term, but brand response, right? So looking at channels and opportunities to, build awareness for our product and our brand, but with a direct response kind of mindset and, and measurement, right? Because like television and radio, most people are like, hey, that's hard to measure. It's actually not. It's there's a halo effect that's hard to measure, but there's methodologies that you can use, and which we do internally, and measure these channels in a way where it's more of a direct response kind of measurement, but leveraging channels that are typically used for brand and brand awareness.
Brad, you mentioned in particular OTT and
Yep.
advanced TV. Could you tell us a little bit more about how you're using that and how you're measuring it? What are you able to achieve there that you're not able to achieve through linear buys?
Yeah, so what we do there is we take a specific targeted set of data, and we onboard that to the trade desk. And what that allows us to do, well, first through LiveRamp and then into the trade desk. And then we can buy that audience specifically, or based on the match rate, right? Those that we can match anonymously with, with CTV and OTT providers. We then run, various campaigns. We target, specific programming for our customers. So our average customer is 52 years old. So we go after, like I was mentioned before, like news and sports. And we're able to do this now with, very little waste, because, these are people that have seen our message, whether it's, direct mail or we're retargeting them once they've been to our site. We get very specific with them, and we know the impressions we're buying are people that have already seen our message. And so we can get a little more aggressive there too, from a frequency standpoint.
So you're really using it as an addressable medium.
Yeah, I mean, the great thing about it is you can turn it on and off, right? Or up or down. It gives you kind of that toggle, which is, what most direct response channels are, right? You can increase your CPCs or your CPMs and get more exposure. It's similar here. You can dial it up and down. You can do, kind of these flood tests, right? Where we're like, hey, let's spend X amount in a day versus our, regular daily spend, and see if that moves the needle. So it gives you a lot more freedom to kind of treat it almost like a direct response channel.
Did I mention I'm programming a TV and video summit? I may be calling on you.
Brad, you're about to get recruited.
Yeah.
Anybody else on OTT? Because I know that's sort of one of the places where a lot of the D2C brands started pumping a lot of their money during this period.
Not yet.
All right, that's all I got.
No, this is great, guys. Really, I really appreciate it, and a lot of good information. So thank you so much for taking the time to be with us.
Thank you.
Thanks,
Thank
guys.
you.